Welcome back to the channel. I'm Foreman, and today I'm going to be showing you the UK stocks that I bought. Although you may already hear my voice, my throat's a bit gone, so I'm going to sound a bit different today. Hopefully that's okay. And if you like the video, please drop one of these to help beat that YouTube algorithm. Starting off, the FTSE 100 had managed to gain, according to Google Finance, 1.34%. The FTSE 250 has managed to gain 1.42%, and the S&P 500, as of recording this video, has gained around 0.84%. My portfolio has done okay this week. By no means has it outperformed the markets, but it has had some positive movement. It has gained 0.74%, and this is mainly attributed to my top riser in the portfolio, which is actually Boohoo. Boohoo this week had announced that they had plans with their opportunity to create 5,000 more jobs in the UK. This would be a £500 million investment in the next 5 years that would lead to that creation of those jobs. And this is due to the fact that they need to make this investment because of the high growth of the business. They look to expanding their warehouse capacities and also meet growing demand by using additional technology. This is a really good sign to see. It's showing that Boohoo is continuing to grow at a faster rate than the general market and that they are really taking things into action. Sure, at the moment we have got that campaign or the media going against the likes of Boohoo for the like of their ESG, specifically governance in the company, in which, yes, there could be a concern here that they are underpaying some suppliers to make their profit margins higher. But what we've seen is that they've tried to take in every single account of the improvements to make for their agenda for change. And so far, they've done very well, in my opinion. But then after reading a majority of The Art of Execution, a book I am pretty much nearly finished with by Freeman, this details how investors, or the biggest investors, are able to make money despite making a majority losses. And what I've learned from this so far in this particular situation is that typically when a stock is falling, a person can adapt the story to make it sound like an opportunity. And this is certainly something that I've been guilty of in the past. I've seen these things, I've said, well, there's an opportunity here, and I've looked at the facts, and even though the story has somewhat changed, I've continued to believe in it. I don't think Boohoo is anything like this, because I feel that they are effectively taking on the agenda for change, and they are making good moves into improving the company. And I feel that over the longer term, their improvements made today is certainly going to be a good thing for the future of the company and their long-term growth. After all, they've had very impressive UK and US growth, whilst obviously the rest of the world and Europe is lagging behind. I'm very happy to be invested. And in fact, this week I bought an additional 45 shares. And in fact, this was after the news article stating that they were going to create 5,000 more jobs. Yes, shares rallied by around 7% in a day. I continue to buy because that 7% rise is still massively below where shares were a year and a half ago. I think there's a lot of potential for movement, even if at that point in time Boohoo were certainly overpriced. I do think there is potential for these shares to climb up, and therefore us to make a good amount of money as investors. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200 when you use my link in the description below. There were a few top fallers in the portfolio this week, starting with the highest in the ISA, that is Team 17, and they dropped by 6.79%. There is no real news on this, and in fact this is what I expected. Shares had shot up a lot over the last 2 months due to different things, such as the Sumo Group acquisition by Tencent, and also some impressive results that they had shown. What we can see here is that yes, the hype is now lowering down, and it's becoming a much more attractive price once more, and it's nearing my average price. I'm not buying any more shares of Team 17 just yet because I feel that the shares have got a little bit lower to go, and I think at the moment they are a little bit of an overvaluation, especially considering the hype in the industry. And then another one of the fallers in the portfolio this week was the likes of Argo Blockchain. Shares had dropped by 4.44%, and this was actually a very concerning thing to read at the start of the week. There was this report, or this research by Boatman Capital. They had alleged that basically Argo Blockchain's governance really wasn't of a good quality. And I had read all 17 pages of this document, and I'd done this when it was very late at night after being back from a night out because I needed to read it. And at that point I was like, ooh, this is not good at all. Since then, the CEO has responded, although this still gives me a bad taste in my mouth. Like I mentioned before, when being misleading about the Nasdaq listing, and then only now saying that they're exploring options to uplist to the Nasdaq, that had left a bad taste in my mouth, and this has only continued to do so. What is highlighted is that Boatman Capital has claimed that they overpaid for the land in Texas for their facility. They paid something like 5 million plus share options, at total 17 million as a whole. The CEO has said, well, yes, we've done this, but it was an all-in-one bundle so that we've got the engineers and everything working on it, and so that this price would be over for the development over the next 2 or so years, which makes sense and is fine. But one misleading thing they consistently used in their RNS is the size of the land. They had routinely said that it was a 320-acre plot. Boatman Capital had shown that this is 160, and yes, whilst they could buy the plot below it that probably would have given them another 160 acres, what we had seen is that this is very misleading. And then we can notice in more recent RNSs that they've actually changed that to now 160 acres, which is massively misleading. And then we had this very aggressive Bitcoin-backed loan that they recently applied for, like 2 months ago? This was meant to expire in 6 months' time. Why would they use this form of loan when they had access of up to £100 million of a credit facility relating to their Texas facility purchase? It all seems a bit misleading there. And I'm not trying to say this to push Argo shares and add fear, uncertainty, and doubt. In no way am I trying to manipulate the stock. What am I going to do to it anyway? I'm not trying to create any fear in the minds of you watching this. Instead, I'm just pointing out some of the negatives that are really correlating to poor governance in a business. And after all, Boohoo are another stock with poor governance, and I remain invested in them because I hope that that can improve over the longer term. With Argo blockchain, it is a bit suspicious that they've been misleading on these details. And it does seem like the benefit was, of course, for the likes of the shareholders, not the shareholders, the board members and those with stakes in the company. And then there was a claim about Celsius Network or whatever, and they loan out around about 40% of the machines. And this would have been a concern because there is an ongoing litigation between Argo blockchain and Celsius. And so Boatman Capital had mentioned that this could be a massive concern if this goes in an unfavorable manner, because obviously then they lose 40% of their mining capacity, and that's not a good thing. This was quickly debunked by the CEO as this, yes, they are litigated between each other. It's for a different thing, and it doesn't relate to their contract with the loaned out Bitcoin mining kit. Instead, it relates to a separate situation, and that is to do with the fact of another complex thing, but I highly suggest that you go watch the latest Argo blockchain video and you'll get more of an update on that. Overall, I had to make a choice, and once more, going back to the art of execution, I have got an Amazon link in the description down below if you'd like to get one for yourself. Going back to this, what it had shown is that there were a few types of investors. You had the rabbits, which is quite a comical name, and this rabbit's name had meant that whilst this stock had dropped below 20%, they didn't do anything about it. Instead, they just pushed it aside. They decided that they were going to think about it later. Currently, my position with Argo blockchain is down around about 31%. At this point, I would need to make a decision. Do I trim the position and be an assassin, or do I buy the dip and be a hunter? This is where the mistake I made is, not the mistake of buying too early. Instead, I don't have a cash position, so I'm not in a good spot to buy the dip significantly so that I alter my average price, although I have done that before. So, for me, the story really hasn't changed. Yes, the management have left a bad taste in my mouth. I think there's enough share price factors that can push it up over the medium term, so I'm going to stay invested. No need for me to sell here because ultimately a majority of this information has been debunked, but it has left some doubts in my mind. All it's confirming to me is that once this happens, this listing is done, that Texas facility is built, I'm likely trimming a majority of that position and then leaving it really in the back lines. And then another top faller which isn't in my ISA portfolio, but some of you may know about, is BOTB, Best of the Best. This is one I routinely recommended on my stocks to buy series, and since then it's dropped significantly. In fact, I believe shares were trading at around about £35 when I first mentioned them, and now they're trading at £8 per share, which goes to show, just because I'm recommending these stocks, it doesn't mean they are in any way good buys. And in fact, I bought on the last dip when they dropped to around about £19 per share, and they'd continually fallen after that. I'd like you all to know that I have an insignificant position with this company. I only invested around about £500 into the shares. I would perhaps buy the dip because I think this is a temporary change in the marketplace in which the cost for ad impressions on social media has risen, and obviously that means their customer revenue has decreased. I think this is a temporary place. This is a good company, and yes, over the longer term they could do well. Shares were massively overhyped. They're now at a more reasonable valuation, but I don't have the spare capital to buy the dip as it's outside of my ISA, and ultimately I need to invest tax-free first because I don't really want to concern myself with taxes, and I'd rather have it all sheltered for the longer term. Although it does make me think, because if it was available on Freetrade and I could have bought it in my ISA, I could be sitting on a pretty substantial loss, as this is very much a company I was bullish on, and it goes to show that BOTB doesn't really have an effective moat. And in fact, their consistency in financials is irrelevant. In fact, it's completely discretionary, and this adds a lot of risk that perhaps I wouldn't have first considered. So I just wanted to point that out. Yes, that would have been a mistake I would have made if I'd invested much earlier. I'm currently down around about 50% on my position, if not more. And because it's such a small position, it does not bother me. I'm just going to hold it and I'm going to forget about it and leave it elsewhere. We've also got AHT recovering quite well for this week, gaining 3.11%, and Games Workshop just about trading sideways, dropping by 0.68%. If you're interested in my question of are dividends truly pointless, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a fantastic day.